Welcome back, everybody, to the Wilton Report, which is Princeton and I think Mercer County, if not New Jersey's only dedicated real estate podcast, talking about all things Princeton and Greater Princeton real estate. We're going to cover a lot of ground today, so I would tell you to put on your seatbelt, maybe grab a pen and some paper. We got a lot to talk about. Market is just, as always, fascinating, so welcome back. For those of you who have not done so yet, I always say please subscribe and or leave a comment on Spotify or Apple Podcast, giving us a rating. So helps the show and helps us reach new listeners and viewers. Okay, so that's it. We're going to get started. Reminder, save the date, October the 19th at 10:15 a.m. We at Queenston Realty are hosting a market research presentation. It's really data-driven. If you have ever watched or listened to this podcast, you know it's kind of all about the numbers. And it's interesting. I will make you laugh. Well, I'll make Chris laugh if he's listening to this. I saw a past customer of mine at McCaffrey Supermarket the other day, and he said, he and his wife were talking about it, their experience buying a home, and he said, you were right about all the math and the numbers and how to look at the market. So the market's the market, and that's what we try to uncover. So I've been doing this for now, I think this is the fourth week. So kind of looking at the inventory and what's happening, and I'm going to kind of swing back to this in a minute, but on June the 20th, there was 57 homes for sale in Princeton, right? 47% of which was above $2 million. Interesting. July 10th, it dropped to 47 homes, 59% above $2 million. The 12th of September, because I didn't do a lot of shows in August, which was just a couple of weeks ago, we were at 57 homes for sale in Princeton, 43% of which was above $2 million. And today we're at 58 homes for sale in Princeton, only 39% of which is above $2 million. I'll come back to that later. Some interesting opportunities for buyers in the under $1 million segment in Princeton. So let's talk mortgages, okay? So I think, again, being in this business, you'd have to be sleeping under a rock not to hear that rates came down, right? So there was actually realtors marking themselves safe on Facebook from having mortgage people explaining that rates came down. They came down. So let's talk about where they're at and where they're projected to go and what on earth is the mortgage spread, because I do get a lot of questions about that. So I figured I'll take a minute to answer it. Okay. So obviously the Fed slashes interest rates by 0.5 point, an aggressive start to its first easing campaign in 4 years. That was on a Thursday. And I can tell you the same day rates went up. Mortgage lending rates went up. So it's because the banks, the mortgage lenders had already built in the Fed cut into their interest rates. So rates today, right? And this was from fortune.com, kind of a generic publication. Current rate 6.127 for 30-year conforming. A month ago it was at 6.3. A few years ago it was in the high sevens. 30-year jumbo, again, jumbo loan depends on your market. 6.4, it used to be 6.7. FHA, which is a great loan, but down 3.5%. 5.8, it used to be 6.1 30 days earlier. So rates are definitely better than they were. They're in the low sixes. Everyone's question is, where are they going? What does this mean? Oh my God. Change brings questions. Options brings questions. So if you pose the question, where are rates going? This is literally the Google headline. First one, will Federal Reserve cut interest rates again this year? The Fed forecasts lowering rates by another 0.5 point. And then another news, that was CNBC, another news said, no, it's a 0.25 point. So what is it? Well, I'm going to give you the information. I'm going to give you my opinion, of course. But let's talk about the mortgage spread, because this is the overall indicator of where your borrowing rate will go. So what is the mortgage spread, right? And mortgage people love to prognosticate about this as if they had any impact in the making of it. They don't, okay? It's just to be clear. So if any of my mortgage colleagues are watching this, they're going to get mad at me, but my God, they like mansplained it to death. So the mortgage spread is the difference between the 10-year treasury yield and the 30-year mortgage rate. So that's it. That's what the mortgage spread is. What does this mean? Historically, the difference between the yield, the treasury yield, and the lending rate that we get has averaged 1.75 since 1975. So if you look at history and you say, okay, going back quite a bit of time, the difference between those two spreads was 1.75 percentage points. That's it. That's the mortgage spread. Where we're at, for a lot of different reasons, which I'm not getting into, in October of 2023, the spread was 2.29 percentage points above the 10-year treasury. At the time, the 30-year mortgage rates were at 7.79. That's a pretty significant difference, okay? So today, if you just applied that same 1.75 to the treasury yield, the mortgage rates would be at 5.4 versus the current 6.1, 6.2 that we're at. Why? Printed money during COVID, a little bit of inflation, bringing jobs back to the country. You know, there's the jobs, but I think the two biggest things is jobs and cheap money during COVID. So there's a lot of debt. But that's so today, if we were in a normal pattern, your borrowing rate would be 5.4 versus 6.2, which is pretty significant, actually. Like that's a big drop. So the question is, where are they going? And again, opinions are like eyeballs. Hopefully everybody has one. So Fannie Mae says at the end of quarter 4, 2024, you're going to be at 6.4, quarter 1, 2025, 6.2, and then quarter 4, 2025, 5.9. The Mortgage Bankers Association, which is usually the most bullish about low rates, I can't imagine why, self-interest, projects quarter 4, 2025 at 5.9. Wells Fargo has us at 6.15, and then going down to 5.55 quarter 4, 2025. I would probably be in between Fannie Mae and Wells, if you want my opinion. I think by mid to the end of next year, we'll be at like 5.75. Hopefully that is a low enough rate to get sellers to start putting their houses back on the market. Not really seeing that yet, despite people claiming it. We're just not. Inventory's up, and not dramatically. So that's the forecast for rates. Where it goes, there's 1,000,001 variables to this. Inflation, jobs, stock market, global unrest, oil. I mean, there's a lot of different things that day-to-day play into this. These are forecasts. Sit with your lender, right, today, if you're buying a house this week, and pick a price that you can live with for a while. Do not buy a house, think you're going to refinance tomorrow, because you're not. You're not. Refinances are back in the market, right? If you were in the high 7s or even in the 8s, and rates are down on the low 6s, that's a pretty good spread to maybe refi to, or go from a 30 to a 15-year, but we'll see. So then the question is, if rates are coming down, doesn't that mean the economy's slow? Doesn't that mean the market's slowing down? Are prices coming down? What's happening? So we're getting this a lot. I've had 5 or 6 different buyer and seller consultations this week. If I had 6, and this is new people, new clients that we're meeting, probably 6 people had 6 different opinions as to what's happening. So we're going to look at some indicators today. And it's a number you should know. So what's happening? So let's talk indicators. Let's talk future. So when you're making an offer on the house, it doesn't matter what you think's going to happen. Again, the market doesn't care about your opinion. Sorry to hurt your feelings. One of the indicators you can look at for future activity is what we call absorption rate. What is absorption rate? It's an indicator of the pace of sales in real estate. So under 5 months of absorption rate, you're in a seller's market. Over 6 months of absorption rate, within reason, you're in a buyer's market. 5 to 6 months is normal. I don't know when I last saw normal in the real estate markets, but they're saying at 5 to 6 months, you would see a normal rate of 0.5 to 3% appreciation per year, right? It would be normal. Right now, we've seen crazy appreciation despite high rates, high rates, locked in sellers. So there's all these different variables in the markets. So today, what I thought we would do is we would go town by town, look at available inventory by price point and the corresponding absorption rate. Okay. So East Windsor. And by the way, I'm only doing single family, right? I am not doing condos, townhouses, because there's a lot of variables. I did not take out 55 plus. So in these numbers, there could be some 55 plus, which we'll talk about in a second when we get to Cranberry. But absorption rate can vary by neighborhood. So if you're in West Windsor, Colonnade Point and Canal Point, two different absorption rates. La Park and another single family home neighborhood, two different absorption rates. Little Brook, Riverside in Princeton, Montgomery Woods, Montgomery Hills, everybody has a different thing. When it's built, the number of beds, baths, lot size, everything matters when it comes to this. This is an overall indicator of the market. Okay, that's it. So let's talk East Windsor. Single families only, there's only 21 of them on the market, which is catastrophically difficult for buyers. So by price range, 0 to 500, there's one active single family house in East Windsor. That's it. 2 were pending. So 2 were under contract and pending in the last 30 days. That gives you a 0.5 month absorption rate. So again, that is an extreme seller's market. It is what it is. 500 to 699, because that's sort of like that middle spot in East Windsor, where maybe you used to get that 3-bedroom, 2.5 bath house. There's only 5 for sale. 2 are pending. It's a 2.5 month absorption rate. 700 to 999, which again is a big spread. There's a lot of variables here. There's only 4 for sale. 2 were under contract in the last 30 days. That gives you a 2-month absorption rate. So what does this mean? It means in the 700 to 999 price point, if nothing comes on the market in that price point, there's nothing left to sell in less than 2 months. That's it. The shelves are empty. In the 0 to 499, in 15 days, if nothing comes on, that thing is statistically going to be gone, and you have to wait for the next one and bid against the market. So this is an extreme seller's market in East Windsor, period, end of story, right? West Windsor, only 22 single families on the market in West Windsor. One of my customers I was texting with this morning, it is Sunday morning, by the way, and he's like, God, there's just nothing on the market. I know, it's brutal. So there aren't any even single family homes under 500 in West Windsor. There used to be, not anymore. 0 active, 0 pending, absorption rate not applicable. 500 to 999, 11 active, 6 under contract and pending. The absorption rate's 1.8. Now, of the 11, obviously you have to go in and see what neighborhood they're in. Are they in a main road? Main roads tend to have higher absorption rates than neighborhoods. Cul-de-sac homes have lower absorption rates than main roads. So this is a blanket number. That being said, it's an extreme seller's market in that segment. 999 in West Windsor, there's 11 on the market, 5 went under contract and pending in the last 30 days. So that's 2.2 months of absorption. So, one of our customers said, well, I've seen things linger on the market in West Windsor. Okay, this is the totality of the market, right? Until this shifts over here and the actives build up, it's a seller's market. Right? You're not going to get a deal. You're not going to get like this crazy discounted price against the market. Now, I'm going to say this. If houses are trading at $800,000 and a seller puts their house on for $950 and you get it for $800, you didn't get a deal. You got it at the market. If that seller puts their house on at $800 and you get it for $750, you stole it. That's a good deal. So, when you see a price reduction, it means the seller probably priced it ahead of the market versus at the market. That's what's happening now. So Cranberry, great little town. There's 6 single family homes in Cranberry, 0 under 500. Interestingly, 500 to 699, there's 4. I'm sorry, 500 to 999. There's a typo there. 4. But I did pull that up because none are pending. 2 are 55 plus, new construction, and 2 are on main roads, older homes. So again, I just said on the previous slide, main roads have higher absorption rates than cul-de-sacs, right? So again, if you want to buy a house in Cranberry, call Kate Bonchef from my office. She moves more people in Cranberry off market than there is on the market. And again, $999 single family homes in Cranberry. There's 2 under contract and pending, so an absorption rate of 1. So overall, there's just nothing to buy in Cranberry. The 2 older homes, the 2 homes on the main roads will sell. The new construction will finish and will sell. So there's just not a lot of choice. It's an extreme seller's market in Cranberry. Lawrenceville, right? There's 24 single family homes in Lawrenceville. Lawrenceville is a huge municipality. There should be like 2 to 3 times that amount in Lawrenceville active. So 0 to 499. So it's actually encouraging. There was 5. The issue is more are going under contract than are coming to the market. So that gives you an absorption. 9 went under contract and pending. That's an absorption rate of 5. So 0.5, extremely brisk seller's market. So 5 active, 9 under contract and pending, 0.5 months absorption. Brutal seller's market. Single families in Lawrence under 500. And again, east of 95, west of 95, there's a lot of variables, main road, non-main road variables. You have to look at that. But if you're working with an agent and you haven't covered absorption rate, fire your agent. That's my advice, because this is the first thing we do when we sit down with a new buyer or seller, and we mark it and we log it, and then we see if it goes up or down over time. So it's an important number to learn. So again, apologies for the typo. This is 500 to 999 in Lawrenceville, 13 active, 19 pending, same story. They're going under contract literally faster than they're coming to the market, 0.68 months absorption. 999 plus in Lawrenceville, 6 active, 3 pending, gives you an absorption rate of 2. That is brutal for a buyer. Like, that is about the most brutal picture. East Windsor, Cranberry, Lawrence, West Windsor, brutal for buyers, right? Brutal. So Hopewell, some hope in Hopewell, I thought anyway. So 5 active, 5 pending, 1 month absorption. 17 active in Hopewell, 500 to 999, but 19 are under contract and pending. When I saw the 17, I'm like, oh, that's good. But then they're still going under contract faster than they're putting them on the market. 0.89 months absorption rate, extreme seller's market. 999 plus 12. I'm like, wow, that's pretty good. 20 went under contract in the last 30 days, 0.6 months of absorption. Brutal. So brutal. Good time to be a seller in Hopewell. Pretty brutal time to be a buyer. Princeton, 46 single family homes. So this is interesting. We're going to, obviously we focus a lot on Princeton, but we do cover the entire market. So interestingly, in Princeton, there's 46 single family homes. And as I recall, there's 58 overall in Princeton available today. 10 are under $1 million. So there's 10 single family homes under $1 million available in Princeton. I will tell you, I have not seen that, I'm going to say, in a few years. Some of them need a lot of work. A lot of work. Couple are probably not habitable, right? But there's still opportunity here. Like, if you're a buyer and you want to know which ones I like and why, you can shoot me a text. I'll share my cell phone later. So 10 active, 3 pending, so 3.3 month absorption rate. 1 million to 1,650,000. So why did I pick that price range? Just based on our current client base's search patterns. That's like a pretty broad search, but it kind of shows you where people are looking. That's a sweet spot in the market for sure. So I put 2 under contract in that price segment last week alone, right? 8 active, 6 pending, 1.3 month absorption rate. Now, of these 0 to 999 and 1 million to 1,650,000, 3 or 4 of them have offers. They just haven't converted to active or contract with pending. So these numbers are fluid, right? We can always update them every once in a while for you. 1,650,000 to 2 million, there's 8 active, 4 pending, 2 months absorption. 2 million to 2.99 million, 10 active, 2 pending, 5 months absorption. And then when you get to the 3 million plus, 10 active, 1 pending. I think it went under contract last week on 𝐂𝐎𝐍𝐍. 10-month absorption. So you can see in the 2 million, I don't want to say it slows down a little bit, but at least the consumer has choice, right? 10 versus 0 in some of the towns that we just covered. So again, in the under $1 million segment of Princeton today, there's opportunity. Let's put it that way. I think there's a couple good houses that can be worked on and cleaned up. But again, if you're afraid of work, tough market to be in. So that's the absorption rate overview. I didn't do Montgomery today only because I don't trust the system we search out of. It's just an inferior database. So I will do Montgomery in the next week or two. Next week, we're going to talk about redlining and what that is. And we're going to talk about the egregious effect the historic district has had on Princeton, how it's become the new redlining. So if you want to know what redlining is, Google it for now. If not, I'll talk about it in a week or two. We're going to close the quarter. The third quarter is ending this coming week. So we'll close the numbers in the third quarter, see how everything went. But just a reminder, if you're buying, selling, you're a landlord, or you just want to know what's happening in the market, October 19th, you can come in person to the office. You can connect with us on Zoom. We'd love to see you, but we don't care. Like, you can do whatever one you want. It's October 19th at 10:15 a.m. It's a Saturday. Just text seminar to 609-773-8054. That's my cell. Just shoot the word seminar. We'll get back to you. And I do get a lot of questions from people like, how do I schedule a consultation? Just text us. Just text me and we'll book a time. Okay. So, that's it. That's the last, not the last, that's the latest edition of the Wilt Report. For those of you who have not subscribed, please click the subscribe button. For those of you who have, and for all your positive comments, Chris and Evan and everybody else, I appreciate it. We'll see you guys next week and the week after with some more episodes. Any particular topics you'd like me to cover, obviously feel free to shoot me a text and I will do my best to cover it. That's it. Thank you, everybody.